facts from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 19, 2022, and the stock market is about to crack. Today was an awful start to the week, but what we saw today, it is pointing towards a very important week this week and even more next week. And to show you, we got to start with the pretty pictures, and what this chart is highlighting here is the correlation between the NASDAQ and the tech stocks. And this is important here for earnings because what you'll notice, all of these little circles right here, this is every time the earnings season begins to start, and usually we get a bottom, and that's where I'm saying whatever we get this week with earnings and even next week, if it does not provide the relief that we've seen over the last 12 months, then the market is going to crack and hit a certain new level that we really haven't seen. And on top of that, the market is at a key technical right now, the 100-day moving average. So if you thought today was bad, it definitely was, but it is not the worst just yet. And that's why earnings and Powell next week, it is really going to put the dagger in the coffin, or nail in the coffin, I don't know. But since we're already here, let's go to the other pretty picture. This is another thing now highlighting kind of the unprecedented nature of what you've seen in the market. Pretty much out of 15 trading days, 13 have been down to start the year, and this is very bad, or it's an anomaly, but even more so now, this chart is showing you the 2-week change of outperformance of energy against tech stocks, and pretty much last time you have ever seen energy outperform tech by this amount, it was in 2001, and that 0.21, it's pretty much saying that energy stocks are doing 20% better than tech stocks in the last 2 weeks. So it's highlighting a lot of the momentum that you've been seeing, but even as far as what we got today, there was just so many different things in those earnings. It added to a lot of the pressure that we talked about yesterday. So we got a lot to talk about. I'm going to go over everything that happened in the market, all of the plays that we made. We got to take some profits, and I even opened up a couple of plays as well too. We got clapped on a couple of the long terms, but it's not time to freak out yet unless these earnings are really bad. But there is still a lot of plays that we're looking at and a lot of plays for the rest of the week. So make sure you guys drop your thumbs up on the video. And again, big shout out to all of you guys watching it and showing love. And if I could give you any piece of advice, stay in the game and know what you're freaking out about. Yes, it gets scary, but you could always identify your own bottom as a trader and know when to really panic or not. But as far as what you saw today, this was essentially some of the continuation of the volatility that we got last week, but a lot of this was simply earnings. Now, I think the market's volatile. I think we're at a very key level. Again, what you've been watching has been so bad for these last couple of weeks, but despite all of that, I think today's move really was about earnings, and it kind of reminded me about earnings season. We had a lot of quick moves in the morning, kind of chilled out. We could have been a lot lower, but then it kind of did this bounce only to end up there. We've seen this a lot of earnings, but we talked about this yesterday. This morning, Goldman Sachs did absolutely awful on their earnings, and now that's even more banks doing bad. And like we said, if the bank stocks start doing bad, that is going to leave no safe haven. And pretty much after what you got today, that's what relates to the pretty picture here. The only green industry in the whole entire market was oil. So now that banks aren't getting the same love after these earnings, it is going to create a more volatile market. Now, if we do get good earnings tomorrow out of Morgan Stanley and Bank of America, that could ease some things. And this is where I'm saying, depending on the reports that we get, watch how the market reacts, because if earnings could break us out of volatility, then welcome to earnings season. This chart will go back to normal. People will stop freaking out. But if not, then that is very well the market cracking. Now, we already talked about this here briefly, and I keep bringing this up on stream, but this week is still going to be big, because depending on what these earnings do, it could really set the attitude for all the big earnings. But now it is all just the teaser, because there's a lot more action next week. You get Netflix this week, but the week after that, you're going to get Facebook, Apple, Microsoft, all of them, and they could do a lot of damage or they could save a lot. But then on top of that, you are going to hear from the Fed, and right now we already have a Fed blackout, so you won't hear from any of the other Fed members. The real problem here now is what is going to happen to the markets in the meantime. So essentially, if the earnings are bad and people keep freaking out about what the Fed is going to do, we might get more pricing in on the bonds showing hawkishness. So we've been talking about this, but this is something that happened today, and I promise you now, if the bond yields keep going higher, you are definitely going to hear this narrative, and this is where it gets super hawkish. But essentially, if you've looked at the Fed futures, we have already priced in a March rate hike. That is what the market 90% sure thinks is going to happen. But now, after this move today with more velocity in the bonds, again, it was kind of chilling out, but then kept going. The next step is that the market starts pricing in a bigger cut than expected for March. So this is the chart right here for the Fed futures. You can see 91%, they're pricing in a quarter point raise, but now this probability doubled today from 3 to 6, and this is what you'll start seeing happening. Essentially, if TLT keeps dropping and you see the bond yield start to go higher and pick up velocity, even for the short term, the next thing the market is going to start pricing in, instead of a rate hike in March for a 0.25%, they're going to start pricing in a very ultra double hike, which is very, very hawkish and bearish. So depending on what we get for earnings this week and how the market trades out, this is pretty much going to be the next kind of macro thing to watch, but you might watch short-term effects get created from it. So keep your eye out for that. But other than that, it's going to be all about earnings. We're going to watch what happens here with the bonds, and we're going to see really, does earnings save us, or is this going to kind of be the final crack? And then then it gets real crazy. But coming into the company news and events, we got this one here in the morning, and this had a big portion of the news that we got today and had some effect. But Psaki said that the Russians can attack Ukraine at any moment. There's been a lot of news about more and more buildup, and we've talked about this today. Pretty much, if there is any sort of attack, I don't think it would freak out the market too much. It would affect oil. The real thing that will affect the market is the response by the United States. We have a couple of options, but we talked about this today. If you end up hearing a SWIFT ban of Russia, or they ban Russia from the SWIFT payment network, that would be the ultimate black swan, I would say. But other than that, you just should see a lot of volatility there with oil. But that was a big piece of news today. As far as what we saw with tech, the NASDAQ has now slumped towards a correction after 2 months without a new record. But now net tech allocation is at its lowest level since 2008. Less than 1% of funds are overweight in tech, which is very, very rare. And then on top of that, with all the volatility that you've seen since the beginning of the year, we have seen bigger drawdowns on the NASDAQ in the last 2 years. The NASDAQ has felt a lot more, but what you're experiencing now is the longest correction at 60 days. So usually they've lasted for half the time, 30 days or less of the market correcting. In this case, we have now hit 60 days of just constantly in correction territory. Now, we'll see where that goes after earnings, but a lot of what you're seeing today, it's starting to hit these unprecedented levels, so we'll see what happens. But there was that. Then Ford, they announced that they're seeing a $8.2 billion gain on investment from Rivian. They're going to be recording it a little different. They had a $900 million gain, and pretty much they said they're going to report it as special revenue, so it does not factor into their estimates, which was kind of good. So watch out for that. They did not move after hours off that news, surprisingly. And then Texas Power Grid, they're bracing for freezes that are going to imperil their fuel supplies. Just about like 2 weeks ago, they lost about 10% of fuel supplies once the weather got pretty cold there. So there's another storm here. People are looking at winter. You remember what happened last year. So UNG gas and all of that is on watch, but you might start getting these headlines. And then finally, you heard about this one today. This is a very, very big one. Microsoft has announced their largest purchase ever. They have never spent this much for a company, and they did it for Activision, $69 billion. And they said it is their bet there on Metaverse to be able to develop into everything that the future has. So pretty straightforward. A couple of political things. Again, what's going on with China is important. What you're getting out of Russia, and now earnings, and then more aggressive rate hikes. That's probably going to be the next things. If the banks save us tomorrow, we should be good. Otherwise, a lot of eyes are going to be on focus for next week. So I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 different stocks that I'm going to be looking at. There will be post-earnings continuations tomorrow. Again, you are going to get a couple of companies reporting. I may just start there. Bank of America, UNH, they report in the morning. So keep an eye out for them early on, because depending on how they report, we could play the continuation. We've hit every single one of those so far, and you've seen the opportunity. So just keep your eye out for that. But remember, too, if the premiums are already high in the morning, you could wait a little bit, especially if we get volatility. And And then on top of that, watch Goldman Sachs as well today. They reported, but there's sometimes these 2-day continuations. That one could be fire, so I'm going to be watching them. But as far as the other plays in non-continuation, the first one that I got lined up here is Uber, and I went for the earnings run-up calls now that it's cratered below 40. But if you remember, we've been trading this every couple of days. We had those old Uber puts, so those came up today. I sold out at 20%. They ended up closing up like 50, so we got out of it early. But remember, we held that play for a while. There was a lot of up and down. Essentially, I think these contracts are going to be really bouncy leading into earnings. I think you'll get that move. I think there's somewhat of a floor, but now all of the Uber calls have pretty much came back down to value. So this was the play that I grabbed. I got the Uber 57.5 calls for February. I think we traded the 55s a couple weeks ago, if you guys remember that. So these ones were a little bit further out, but I bought 100 of them for 8 cents, and this is pretty much what I like about it. All of the contracts are pretty much at a bottom. Even if you go in the money, you'll notice that little drop there on Uber, it killed all the premium. So February 18th, it covers earnings. They definitely can decay. I mean, this play isn't too safe, but if we do get a pop, Uber dropped 6% today, I think we might be able to get another flip, or at the very least have something that we could hold into earnings. But that is the first play. Coming into the second play, I'm going to be watching this one pretty much for the next month or two, especially until their earnings, but Starbucks. And this play is long-term meets short-term. Essentially, I like them for the long-term, but I want them a little bit lower, because usually a stock like this, I would want to grab a dividend, but instead I grabbed a leap. I know it may sound contradictory, but my idea is I think Starbucks still has a little bit more room to run, or if their earnings is bad, but it also did drop a lot. So I'm saying, okay, I could either flip some of these contracts. The leaps came down a lot. It could give us some time. Starbucks is kind of one of these value plays, or it's kind of in the middle with how it's traded. So I figured grab some of these leaps, put like $1,000 down on it. I did flip the Roblox and got profit. So I said, okay, I could justify it. And then my idea is I'm either going to lose on that leap and still get to hold it. But then if Starbucks goes down another $5, $10, I could get it at a good entry price for the long term. So a little bit of both, but I did make this play today. I really, really like it. However, Starbucks has just been getting clapped in the market. So I just think earnings is what a lot of it's going to rely on. But as far as the play, I grabbed the January 2023. So just about a year of time right there. I didn't get the 2024s, but I grabbed the 115 call, grabbed 3 of them at 460. They didn't really move much today after that first drop. So we'll be watching these and see where they go. And again, if Starbucks keeps cratering or after their earnings, it will pretty much start looking like a good long-term pickup with like a 3 or 4% yield. I think right now it's at like 2 something. So we'll see what happens. But that is the second play. And then finally for the last play, baby, Roblox. So it doesn't look like we're going to be getting that user data. That's why I made those gambles last week. Remember, I did that Friday or that Thursday-Friday play. We went twice on them. I cut out of both of those plays today with a profit, but I ended up double dipping after the stock dropped. And essentially, even though we are not getting the data, we got very lucky with this Activision news, because essentially it is very, very huge. There's a big premium that they're paying for this stock, and it is based on the metaverse. So I think it'll be good as long as the market doesn't puke. And if you really look at it, even though Roblox went down today, it definitely outperformed a lot of other names. So I like it. And on top of it, when I grabbed the plays, I was able to buy these shorter term plays for less than what I paid the day before, and I was able to get more time. So as far as the play, I decided to grab 50 of the Roblox January 28th. These are next week. I grabbed 50 of the $99 calls at 29 cents, pretty much right where they were at. They went up about 30% and then came back down there towards the end of the day, but that is the new play. I spent a lot on it, but this was the play that we made on Thursday and Friday. I sold them out in the morning. So if you remember, we had these hundreds. That was the first one. So I was able to sell them out this morning, and I got 20 cents for them. It's not showing up here, so I just went to go look at the history, because this happened today when we looked over it. But you can see here, I sold out 50 contracts at 20 cents. It's not even really showing up there, but these were the ones that we bought at like 16, 17 cents. I was down 50% on them. So after the Activision news, Roblox was up there in the morning, sold out of that one, and then I waited a little bit after, and then I sold the 95s. That was the second play that we got. And remember, I averaged down to these ones, and I think I bought them at around the same price, but then we sold there at like 33. It's weird. I mean, the option chains, I felt like I saw more trades go above, but the Roblox chain does not show it going higher, which was interesting. But these plays are risky. They were weeklies. We essentially had a little bit of a gap up there in the morning. We took advantage of it. I got out of these, and now you could see both of these plays ended up dropping big. So what was I able to do? I rolled over into next week, so now I got more time. And then the best part is, even at this price, all of the contracts are still at the lowest price there from the day before. So I said, okay, I could justify it. We'll see. It gives me more time. And then if Activision news kind of comes in and kicks a little bit later, we should be good. But overall, it is very, very risky. But those are the main plays. As far as everything else, we still made a couple of actions. Again, I sold out of those Ubers. We were down 50% on them. I could have got a lot more money, but I still got to walk away with 20%. So we were down on it, came back up. I was happy about that. Then we made a couple of other flips. I forgot I had a TSM. If you guys remember that put, it was the January 135, and crazy to see it go in the money. But remember, we bought these for like 60 cents the day before. Remember, this was a post-earnings continuation. Think 2 days after. So sold out of them at like $1.80 in the morning. They ended up going higher, but that was about 200%. And then towards the end of the day, I also went with another TSM call, and I ended up grabbing, I think, the February 150s. I grabbed 2 or 3 of these. We flipped TSM. We've got a couple of profits there, so I figured let me grab one now on the calls. And now the thing I like about it, 2-day continuation. At the very least, we know the earnings. We know they did good. It's risky if the market comes down, but showed this on stream. All of the premiums are now back to the price from a couple of days before earnings, so I'll take that and roll with it. So as you're seeing, going back and forth on some of these post-earnings continuations, but there was that play. And then besides the Starbucks, the final move was Altria. Now this is something I talked about, and you've watched us flip this a couple times. We were able to get another 50% on it today, and essentially Altria was leading here in the morning. So what I wanted to do was grab one of the weeklies. And why did I go with these ones? I was able to buy them at 4 and 5 cents here in the morning. It was weird to get filled, but after the run up, they were trading at like 8 or 9 cents, and a couple days ago they were going for like 14 cents. So it fell to 4 or 5 on the first dip of Altria this morning. You could kind of see it a little bit. Let's get the daily. There was the outperformance, then it sold off. So pretty much right around here, those contracts were going for about 4 or 5 cents. I bought 100 of them for 4 to 5, mostly at 5, but then it went up to 7, sold all 100 out at 7, 62% profit, and that was another flip. And then that was pretty much it as far as everything else. Gonna be watching Bank of America tomorrow. That's gonna be fire. Abivai, they really killed it today, and you kind of saw the news come to life. If anything, this was probably one of the only safe havens. Our plays are still climbing up, so gonna be watching that one. Didn't take the profits, but we're still holding up 50%. Watch Uber again, pre-earnings run up, but now they're below 40. It's gonna be a very interesting ride, so watch out for that. TSM, then UNG, I'm down about 50% on those plays, but if we start getting more weather headlines, it may start to come back up. This is actually one I will be keeping my eyes out for tomorrow. Then Amazon as well too. Even towards the end of the day, they held up really, really strong while the market really didn't. That caught my eye. Just watch out, especially if we do get any positive hints for earnings. Netflix, pretty much going to be the final day. I mean, you still got one more day till earnings, but if there is going to be a big, big move, we need to string together 2 days of pre-earnings run-up. So keep your eye out for them tomorrow. They will be key. Then UNH, this is a healthcare company. They report tomorrow. So whatever they do, there may be a fire post-earnings continuation, but it is a very hard name to trade. So watch out for them. Watch out for JP Morgan. I forgot we had that other play. Sold out of that this morning for about 20, 30%. Could have got like 50 or 60 if we held to the end of the day. But remember, those plays were up in the beginning, or they were down in the beginning. So watch out for them, though. There still might be a 2-day continuation or multiple days. Same thing with Goldman. Going to be watching out for that. And then Hilton, then travel stocks, even Airbnb. Just keep your eye out for them. They all got kind of clobbered today if you really go and look at it. So that's one thing that stuck out that I'm really going to be watching. And then finally, TLT and the dollar. It looks like the market respond to TLT and not the dollar today. And in a weird way, that is good. It shows a red candle on the dollar, but the dollar ended up going up. At least you're seeing that the market isn't following the correlation, but pretty much watch for the flip-flop. We may start seeing the market respond if bonds break below, because as you see, these are some of the higher rates, one of the lowest points on TLT since 2020. So this is even pre-COVID. This is a very, very key level, and this might change some of the pricing. So keep your eye on bonds, but the premiums are a little bit hard to play. Just going to be watching the balance back and forth between the dollar. Earnings can stop all of this if they're good. Other than that, you just got to watch for the Fed rate hike odds. Essentially, that will be the next snitch to say which one is the real leader. But if the market starts aggressively pricing in 2 cuts or a big cut for March, that is going to be the snitch, and that is where things get volatile, and you'll probably see the dollar and bonds play along. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list Let's make sure we see you there in the morning. I need the armor on. I need the helmet on. I need you. Remember, you got to bring the shield to battle. But Nicole loves you. I love you. I will see you in the morning. Let's go.